All right, I'm starting the recording, which means we're starting the webinar. Get this thing out of the way. Good morning, everybody. My name is Jim Cagnina with Infinity Futures. I'd like to welcome everybody here today. I appreciate you coming on early in the morning in some cases, and in some cases not so early in the morning, as we have folks from all over the globe coming today, which is awesome. We have a big group today. It's 10 o'clock, and yes, we are recording today's event. That will be the number one question. We've had a couple of technical difficulties rendering videos and getting them up on YouTube in the last couple of weeks or so. I don't expect that problem to continue, so we should be good to go on today's event. We're going to talk about trading futures today, and we're going to have probably a pretty diverse range of skill levels in here today, from beginner to advanced, from futures traders to non-futures traders, and so I'm going to try to orientate today's presentation accordingly. I do want to remind everybody, trading futures options on futures and retail off-exchange foreign currency transactions involves substantial risk of loss, not suitable for all investors and traders. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, which is why we are all here, it's also an equation for risk, so be careful. Only fund your futures trading account. My personal definition, money I can afford to lose doesn't change my lifestyle or lengthen my retirement horizon. We understand everybody is unique in this world, and there might not be a cookie cutter formula for what risk capital is. So if you're not sure, feel free to contact your customer service rep here at Infinity. They all have extensive experience trading in the futures markets and interacting with traders from all over the country, NFA members, CFTC registered, passed a Series 3 exam at one point in their lives, which arguably isn't easy, and equally as important, have interacted with the markets and with customers pretty much 10 hours a day, every day, for a long period of time. So feel free to use that free resource, even if you're not a customer, even if you're just kicking the tires or you're just seeing if futures trading is right for you. Reach out and say hello if you need any help, fax, Skype, whatever it is. I'll put up my personal information here at the end of the webinar today, and everybody is welcome to contact me at any point. I welcome it. I would rather talk to you than do all the other stuff I'm supposed to do, which isn't that exciting. In any event, any questions, let me know. Past performance not indicative of future results. Keep that in mind. Good morning, Robert. Thanks for coming. Let's go ahead and get started here. So as everybody knows, we have a new web-based charting platform. We're naming it InfinityAT Charts. Here it is. It's, like I said, it's web-based, works on any device. It works on Macs now. Hallelujah. We've been getting the Mac requests for a couple of years now. People were anxious to get it to go. It works on Androids, iPhones, iPads, PCs, all that stuff. And it's integrated with the InfinityAT trading ladder, trading platform, which I'll show in a minute. And its initial launch has been kind of successful. It's powered and developed by our parent company, Transact Futures, and the tech guys over there, they're awesome. They have this thing going pretty well, and they've been really, really accommodative to requests that we've had going forward to add new things, which we are doing. So all that stuff is good. And yes, you could trade from these instead of the trading ladder if that's a question that I'm going to be asked several times today, and we'll show you how to do that as well. But today's conversation is really about simplifying your charts, simplifying your life. And over the years, I've fallen into the trap of convoluting my analysis, overdoing it, needing stuff that I didn't need, asking for stuff that I didn't really need, that wasn't helpful, that made my decisions more difficult and in conflict, and as a result, not as good as they probably should be. So, having said that in mind, when we first put these charts on the drawing board, it's like, all right, we got to make these simple, intuitive, and easy for people to use. Let's start with that, because trading futures is hard enough as it is, and let's not increase frustration by making these more difficult than they are. So, I'm going to show you kind of how I view the markets, what I think about in terms of setups, and what I do when I look at, hey, is there a good trade idea that we see here today? So right now I have a candle, E-mini S&P, September 2019. And I know I do a lot of presentations on this market because it's one of the most liquid and most popular, and most of our customers focus on it also. However, there's other great markets we could look at. You could look at the crude oil market, which is another really big one, the mini NASDAQ, which is a really big one, the micro stock indexes, which is starting to become very popular, 1/10 the size of a regular contract, regular E-mini contract. Currencies, of course, transparent exchange, so many benefits of trading CME Group Forex, I'm going to call it, or CME Group's currencies over cash Forex, over over-the-counter Forex, over companies that just make their own book, make their own bid-ask spread. I mean, come on. We've got a regulated exchange that does that for us, that has been doing that for us for a very long period of time. Metals. Yeah, you can go on, you can see the Monix television commercials, and you could buy your gold bars and your silver bars and have them shipped to your house. But then what do you do when you want to liquidate them? There's a great John Carter video, Simpler Futures, Simpler Trading, of him literally having accumulated all these silver bars and had to rent a dolly to bring them to get them out of his house. Why would you do that instead of buy a silver contract, or sell a silver contract, or buy a gold contract, or a mini gold, or a mini silver? So a lot of benefits, And the grains, of course, they were the original commodities markets. Futures markets were the grain markets. Corn, wheat, soybeans, all of these markets. I mean, that's all you heard about before 1970. And in the 70s, you had the bond markets, right? The interest rate markets kind of become dominant. In the 80s, you had the stock indices become dominant. So you have a long history of transparency and CME Group experience when they develop and continue to support bids, offers, and stuff like that. So to make a long story short, we're going to look at the S today because that's what I've been looking at all morning, and I'm going to give you my opinions on it right now. There wasn't a lot of economic releases per se. I think we had some home sales information, which I'm going to just show you this really quickly. I know we want to talk about charts, and we're going to talk about charts. Hang tight. But this is the National Association of Realtors. I know if you're not in the U.S., this isn't going to mean less to you than it means to me, but these are the kind of economic releases that actually, this is monthly, this actually, is something that traders, investors look at, along with a series of other types of analysis. And so a couple of slides in particular, year over year sales percent change. And, we're into 2019 June, and we're getting back. We're still negative, but we're less negative, of course, than we were in December of 2018. So that might be a good sign. I don't know. Here's the change year over year. The thing that really struck me, though, I wanted to just mention here. You can go ahead and go to the National Realtors Association, get all these reports and stuff. Is in the U.S. anyway. What's the trend here is the sales are happening in the middle of the marketplace, 250,000 to 750,000 for resident, for residential properties, and the higher end and the lower end, are having some year over year negative numbers on it. So that's a very interesting. I thought that was kind of an interesting stat. I just wanted to bring it up. So I'm looking at that. I don't know if this is a good sign going forward. I just don't know. So when I think about the overall economic condition, that's important. Of course, interest rates are the thing of the day, right? We have a Fed meeting coming up. Let me show you one other thing before we talk about. Let me show you one other thing. So the CME Group has this thing called the Fed Watch tool. This is really, really, really cool. If you type in Fed Watch tool in a browser, you'll get this. And remember, the Fed funds are a futures market that's traded in the out months. And this tool kind of gives you probabilities on what type of interest rate changes are up in front of us. And if you remember, since 2008, we've been pretty close to a zero interest rate policy and QE policy in the U.S. for 10 years now. And as a result of that, hang on, I'll bring the screen back in a second. As a result of that, we've had a bull market like like no other. I don't know how far back I could squeeze, but we've clearly had some hiccups here. But in the last, my screen of course isn't big enough. Since 2012, even before 2012, I mean, look at that. I mean, that's a bull market, and this is direct relationship, in my opinion, to interest rate policy in the United States of America. Direct. That's my opinion. So interest rates matter. More than anything, more than the existing home sales that I've just showed you, more than PPI, CPI, any of that stuff. The Fed is in charge of this market, and we see this as we make new highs going forward. If I look at the Fed tool again, and Treasury bonds won't have the same correlation. They'll have a little bit more linear correlation, but I got that weird warning message that just came up. Fed Watch tool. Anyway, so what you do here is you say, okay, so July 31st, 2019 is the next rate decision, right? And we have this chart, and it says current target rate is 225 to 250 basis points. And what the Fed Watch tool is saying, based on the Fed funds rate, the actual traded futures market, we have a 76.5% chance we're going to have a 25 basis point target reduction. The smallest. No, it's not the smallest you could be, but that's the smallest increment that the Fed thinks in terms of. So going from 225 to 250, to 200 to 225, and we have a 23.5% chance, or 1/4% chance that we're going to go to 175 to 200 basis points. Which is 1.75 or 2.00% as a target for the Fed funds rate. And of course, the New York Fed, that branch, that controls that target by issuing or not issuing liquidity. Now it gets even cooler because you can go to the September 19th projection. And it shows, a 15.2%. We're going to be down to 150 to 175. And these change, by the way, all the time, right? These are dynamic statistics, but it gives you a good idea going out what the marketplace is thinking about what the Fed is thinking, or what the Fed funds rate's thinking. And you can go all the way out to April of next year, 2020, and you can see here now we have more of a bell-shaped curve. We have more of a distribution. And we have more uncertainty, of course, because there's more options by then, right? But nowhere here does it say we're going to have higher rates, right? Every year from now, it's saying we're going to have lower Fed fund rates, which affects everything up the ladder or down the ladder, depending on your point of view. So this is a really good thing to look at and just kind of keep an eye on what happens. You could compare. There's all sorts of tabs on the left here. I'm not going to kill you and bore you to death with this any more than I already have. And then prior rate hikes, they have this kind of data also up here. This is just a great thing. I really enjoy watching this. Whoever came up with this, thank you for that. Let's get this out of the way and go back to the charts. All right, so I'm going to use these little handy plus or minus buttons here to expand or contract the view I'm looking at. This will expand, this will contract. And then to move, remember, you're just dragging. You're clicking in the middle of the chart and you're dragging your fist up or down, depending on where you want the candles to land. Same with the left axis or the vertical axis, price axis, and the bottom axis, the time axis, or the X axis, if you remember your math class from high school. All right, so let's go ahead and add a 30-minute chart here. The tick charts are here. Tick charts are awesome. The developers at Transit really made these speedy and focused. I don't use them. I'm not smart enough to know how to use them very well in terms of analysis. So I'm going to stick with the good old-fashioned 10-minute candle chart. And there we go. I just changed it to 10 minutes. Everything is cool. Now, the one thing a couple things that are standard, right? So people are like, well, I want a good oscillator on my charts. I want to add an oscillator. And there's all sorts of different types of oscillators people use. You could choose from those through the studies drop down and pick what you like. Lately, I've been looking at this thing called CCI, the Commodity Channel Index, and I put it down at the bottom of the screen there. You could use this little menu bar in the lower left here, and if you want to add it to the top of your chart, you could do that. I've seen some people that like to do that. I like to keep it at the bottom of the chart. And then there's a little gear here. You could change some of the parameters, but this is a really straightforward one. Overbought 100, oversold minus 100. So the period's 20. So that's kind of standard. I'm going to leave that alone for now. At least I'm going to, and I'll hit done. And then if you want to, expand chart region 2, so to speak, you could just drag it up or drag it down. Okay, and you can see here, what I look at isn't necessarily the overbought or the oversold peaks or valleys. I mean, those are good to know, but I like to look at the crossovers. When they cross the zero line. When they cross the zero line with momentum, sometimes you get a couple of candles after that in your favor. So let's take a look at this one right here. We crossed here with this big red bar that dropped down, when the market opened at 8:30, when the New York market opened, the cash market opened, I'll call it. You've had that big candle, and it broke down. So no surprise here that this was a bearish candle. We did have the crossover, but as you could see, we did have a pull up, but 1, 2, 3, 4, 5. This trade was good for 5 bars if you decided to use this signal to go short. Let's go back here to, I don't know, let's go to 1:10 in the morning. We had a crossover. It kind of lingered here on the zero line for a while, but it went all the way from negative, whatever that is, to positive up here. So when it crosses with momentum like this, it's like, hey, I think you got a couple of bars of action here. And here you had 1 bar of action, 2 bars of action, boom, it crosses. If you wanted to count this one, you would say, all right, this whole zone was good for longs. If you just wanted to wait for this one, you'd say, okay, you got 1, 2 candles for longs. So depending on how you trade, if your time horizon is 5 minutes, 10 minutes or less, then this was you had to exit accordingly. Otherwise, if it was longer than that, you ride this long position for a long period of time. So the crosses of the zeros, they don't always work. But it's something I like to look at. And sometimes you could pull a couple of candles off of that cross, the zero line cross. Surely the, overbought and oversold areas, you could see things in the tea leaves also, but in this particular case, I'm looking at, Michael, I like the 10-minute frame, time frame here. Again, depending on your point of view, if you're doing a swing trade and you're hanging tight for, more than a half hour, more than 60 minutes, more than an hour, and I'll show you another chart I look at for that, then, change it up to 30 minutes or 60 minutes. I mean, 30 minutes maybe max. So that's kind of an oscillator kind of idea, right? The other thing that people like to look at is moving average crosses. Everybody loves the moving average crosses, and I'm no different than everybody else. So we're going to go ahead and go to studies, and I'm going to go down here and find moving average. So moving average here, and I could set it up how I want. Okay, so I like the exponential. I'm going to do an exponential, and we're going to do a fast one and a slow one. So we're going to do a 6 period based on the closed exponential. We'll keep it red. Hit OK, and then we're going to actually keeping it red might have been a bad idea. Let's change that. I'm going to go to studies, CCI. Let's make it. Oops. Moving average. Sorry. Let's make it blue, light blue. I got a black background. And we'll make the next one yellow. So let's go back to studies. We'll have the second moving average. So we have a cross, right? A fast one and a slow one. And I'll just go ahead and do moving average. And everyone's different, right? You might have a different, I'm going to make this one 20 for the longer, since we're on a 10-minute. Everybody has a different thing here. And you could do, there's exponential, simple, time series, all this stuff. Wells Wider is kind of popular, double, triple hull. I'm just going to keep it what I remember from my days of the floor, and that is 1980, something like that. Exponential was the way to go. So I'm going to keep it a way to go. I'm going to hit done, and there we go. So now we have a cross here to help validate a trade idea. And so you have a CCI crossing the zero line. You have a fast and a slow. We have this fast crossing down. So we have validation right here. 840. We have validation at that cross. So at the next bar, okay, let's get involved, and we're good for a few bars. All right, so that's the second thing. I'm keeping it simple. That's it. That's all I have. You could add a bunch of other stuff or not add a bunch of other stuff. The other window I have open though. The other window that I have open is my market profile, price, and you add that here, price profile plus. TPO, whatever you want to call it, study on here. And this, anybody who's seen one of my webinars knows this is one of my favorite things to look at. And I think it's helpful, especially whoever asked the question, what time frame. This will help you with a longer term point of view, because this really measures supply and demand of the marketplace itself. And keep in mind, today's earnings day, right? There's earnings coming out of a whole bunch of companies, and some already came out pre-market. A bunch will come out after the market, and a less amount in the middle of the day. So this is really earnings week. And when you first start out with one of the profiles, I like to set the start time to equal when the New York cash market opens up. And that's when my profile gets to start. And this yellow line here is called the initial balance, right? These are prices that traded. Let me spread this out a little bit. These are prices that traded during the first hour that the market was open. So from 8:30 to 9:30. And in a day like today, you see a pretty normal standard deviation type of bell-shaped curve here. We have point of control in the middle, almost exactly the midpoint right here at 95.25. You have a low 90.75, and you have the time horizon between prices of value and prices below value at 92 even, and then the same time horizon at the top, 97.50. So those gives me markers. Those gives me areas of interest where I could say, hey, now if today stays normal, there's no really big scheduled events coming on anyone's radar screen. The Fed meeting is next week. Everybody's going to be waiting for that. So short of some crazy announcement, geopolitical announcement, which we seem to get a lot of sometimes, and short of some wild earnings that affect the S&P 500, this might be a normal distribution day, which means this point of control is going to be kind of act like a magnet, right? We're going to go back and grab. It's going to attract balance in the market, supply and demand. This is over a bunch of periods here. This was the favorite price to trade, 1995.25. And as the day goes on, you'll see prices moving up and prices moving down, and seeing the profile skewed one way or the other. And you could trade around that skew to look for, a hope and pray, or, in conjunction with your other analysis, whether you go long or short, a pull back to that point of control, or the development of a new point of control. So we don't have a development of a new point of control right now, because simply we're a normal distribution right now. So where are some trade ideas? Well, some the trade ideas here are if prices drift into up here and prices above value, then one idea is, hey, I want to sell a 98 or a 98.50, and I'm going to put my stop at the highs. Or I want to buy a 91.50, and I'll put my lows below the market. And we wait. And you sit there and wait, and it's boring, and trading is probably the most boring thing ever. Min Lee does not hear sound. I'm sorry. Noessa asks, what about crazy tweets? Yeah, crazy tweets could have a minor impact. Could have we get a lot of crazy tweets from a lot of crazy people. They could have absolutely, they could have a temporary effect on prices. But at the end of the day, the buyers and sellers are smart, the institutions are smart, the banks are smart, the people are smart, the traders are smart, and they kind of understand fair value. And market profile here, price profile, really kind of speaks to fair value. The other way to use it is on a breakout idea. Okay, so we have this initial range here, and this is a tough trade for people to make. And I'm going to put my trading ladder up here to show you why I mean it's a tough trade to make. I got all these screens in the way. I'm so sorry for this. Here we go. All right. I don't know who put that. I'm going to cancel that. Let's cancel out. So the idea in a breakout idea is, all right, if we start trading over 3,000 and a quarter, I want to go long. If we start trading below 90 and 3/4, I want to go short. Now, Could you get burned doing that? Yeah, for sure. How many times have we seen where the high was tested by a tick or two, and everyone would say, "Oh, they picked off our stops." I don't know if that's true or not, but that's the implication that people seem to imply. Alternatively, when it's time for the point of control to change, it's time for when the balance of the market is out of whack, then that's when it moves a lot. So, in that particular case, you would want to buy on a stop. Put a lot size in, Jim. You want to buy on a stop order up high or whatever price you pick, and then or alternatively or sell on a stop order down below. And the ladder's kind of smart. It knows if whether or not it needs to put a stop in or a limit order in. Stop's going to be on this side, limit order is going to be this side, and so that's how you would place that particular order. Alternatively, if you like my first idea, where hey, let's wait for the prices to try to attack what I'm calling the event horizon or the transition between value and non-value, then all right, I want to try to sell the 97.25s. There'll be some price fluctuation hopefully, and then we'll shoot back down to the point of control, and that's where I'm going to get out, and everything will be good. Obviously we're going to have a stop somewhere along the way, but that's the other way to use these market profiles. So that gives you areas of entries and exits. And then when I look at my analytics, now I could decide, all right, what do I really want to do? Do I really want to go long, or do I really want to go short, or do I really want to do nothing? And don't forget, doing nothing is the second best thing that could happen to you. I know that doesn't sound pretty fun or very sexy, but it's true. Either make money, you lose money, or no impact. That's why I'm saying patience is the key here, and this could be a very boring profession, a very boring way to spend your time, but hopefully patience will result in better results than non-patience. All right, so a couple questions here. Let's see. Why did I set it at 6? What? I don't know what you're referring to. What am I setting at 6? Let me know. Can you add third-party indicators to the chart? John asks about third-party indicators. Well, the ones that are inherent in the platform as we speak. I got 3-part answer to your question. Studies are here, and they're all customizable, and it's everything that you've seen on a bookcase, on a bookshelf, and then some. There's some weird ones here I've never heard of, but these are, I don't know how many of them are here, but there's a lot of them. So that's kind of number one. These are third-party indicators, right? I mean, I didn't make them up, and Sierra didn't make them up, and Transact didn't make them up, and Thinkorswim folks didn't make them up. These are indicators that have been around a long time. So they're in there, and they're customizable. Number two, if there's something here that's missing, remember, we're new here. We're new here. If there's something here that's missing, tell us. And I already have some requests from you guys in the hopper from last webinar, and we are going to add them here. Okay? That's kind of number two. And number three, if you have something proprietary that you want to write to an API and get them embedded in here, let me know also. That's something else we could do. The backbone of this thing is a brand new, very powerful, very fast API developed by Transact. That's the backbone of this. It's the backbone of the trading platform, and that's the backbone to the API connection. Should anybody be interested or would like to do it? There's already a lot of the third-party quote people that we're working with to add their basic packages into this thing also. So I think that should answer your question, I think, on indicators. And the fun thing is now we have kind of like direct control on how this development happens. So feel free to pepper me with, I want this, I want that. This is one time that's good. Okay, so Nuessa asks, and Nuessa, if I'm saying your name wrong, I apologize 100%. I'm terrible at pronunciation of names. Her question is, why do you have a 20 MA EMA as my slow moving average and a 6 EMA is my fast. And I'll be honest with you, it's because somebody in my office told me, check this out. I think you're going to get some good signal confirmation with this on a 10-minute candle. And so I tried it out, and I think it's good. It works. I mean, it doesn't always work, but it does give you validation and confirmation. But it's not. I don't know if it's any better than anyone else's crosses. Just the one I've been looking at lately. Okay, Steve, how do these charts differ? In my opinion, the world is now web-based. The world is now streaming. The world is now cloud-based. The world is now on all devices. It's time to join the rest of the world. And not only that, be a leader with respect to how technical analysis happens and how information is processed and passed on to you. So yeah, I mean these are completely different. Completely different. Now, you should have very minimal, if no, system issues with types of browsers and PCs, types of different PCs and processors and all that stuff. Hopefully we're going to wipe away all of that agony and pain that everyone had for so long, including me. Jim, I got this error, I got this system error, I got that system error. And the processing power here is still efficient also. So, and that's my best answer, Steve. I don't know. I don't know. But keep in mind, whatever alternative you want, you get. You want to go with the old PC charts, great. You want to go with someone else's charts, great. At the end of the day, you're placing trades on our trading ladder, and it's spectacular. So I don't want to, freak anyone out. Hang on, just let me take a look at the market here for a second, see where we're at. All right, so now we're approaching. No, we're nowhere. We're still in the middle. We're still in a nice fluffy zone. But I do want to put in a buy order at, I don't know, we'll do it the very last brick here. I'm calling them bricks. 92.50. We're going to take a chance here. I don't know if this is a high profile idea or a high probability idea or a low probability idea. But let's just go ahead and get a trade in here. And remember, this was our breakout, and so we'll leave it as our stop in case we do get filled. Why not? What the heck? Let's do it. We're in sim mode. You can't hurt me in sim mode. Okay. All right, so where are we at? Stuart, can you have multiple charts of multiple contracts on multiple monitors that will be remembered every time you log in from your desktop? Well, the good news is, Stuart, yes. You're able to save your view. In these views, I've got 3 views saved. These views are saved server side. So if you close your computer down, you clean your cache out, you log in on it with a different device into the same account, which you could do, your saved views will be there because we save them server side, and they are associated with your username and with your login. So those are going to be universally there. Okay, that's number one. Number two, you could easily bifurcate tabs and have 2 different charts. I'm a little bit limited with my screen, so don't everybody freak out, but you could have 2 different views on one screen. Okay. At the end of the day, I don't know if it's going to be the next version or the version after that, you'll actually be able to have a split screen here. So you'll have one tab with 2 different market views. Right now, you're just pulling tabs apart, which isn't much different than having 2 market views. But the integration of 2 market views in one screen is a process that's going on right now. So Stuart, hopefully that answers that question. Joe, order flow footprint is being worked on as we speak. So, all right, so the pricing with respect to, all right, that's a great comment. The pricing with respect to the trading ladder and the charts, this trading ladder is, in my opinion, this is again my opinion, the fastest and most stable ISV price distribution ladder. You're seeing speed, you're seeing reliability, you're seeing the market. You're seeing the market 10 ticks down, you're seeing the market 10 ticks up. You're seeing all of that changing dynamically in real time, and hopefully with your internet connection in milliseconds. The charts are, for streaming charts, are equally as awesome. If you see, and they're being, what's the word? Refined constantly to keep up with tick data. Refined constantly to be kept up with tick data. So you'll see in a fast market, our ladder is number one. And you can compare it to anybody's charts. I don't care. The ladder's number one. And then the charts are still so freaking good, excuse my language, that you shouldn't have any issues. So we check this every day. We look at this every day. We're in talks with developers every day. If we see something, we say something. You know, just like you see something, say something. That's what we're doing here. So they're already pretty awesome, and they're going to get awesomer. All right, where are we at here? Kevin asks, do you think in the future we will drop Sarah chart and push the web-based? I don't think so. I don't think that it's certainly not the intention, and I don't think that's going to be the case. I think that you having multiple options to use is our goal, is our priority. We want you to have that option. It's independent vendor is an independent vendor, but we certainly do not plan on that happening. The other thing is what you could use. People use AbleSys as another example. Trade Navigator, another example. There's many different platforms out there that we hook up with, and there's other ones that will be hooked up. So Trade Guider. So I wouldn't worry about that right now. I don't. Again, there might be elements of that out of our control, but I hope not. We really want to keep rocking there. Stretch, is that really your first name? Because if your first name is Stretch, that is probably the best first name I ever heard of. And I have a son named Maximus, and that's really his first name, which is also awesome. What indicators are advised for index trading on a 15-minute chart? Well, so you're not far off from my. So I have my market profile showing me areas, and then I have my indicators, and I'm using a 10-minute. So if I'm going to change this to 15-minute, you're not going to see that much discrepancy in the stuff I already have up there. So I would say, a good oscillator and a good moving average. Those are the beginnings of stuff. I started following a thing called Super Trend, but I'm not really ready to discuss it yet because I want to get better at it before it's a study. You could add it. It's called Super Trends. It's somewhere down here, Super Trend. But be careful. The whole point about simplify your life, simplify your charts, is to do just that and to be patient. So on a 15-minute, it's not much of a difference between a 15-minute and 10. Let's see if we get filled on anything actually. We did. All right. So we got short one. We got the bottom part of the market profile, right? We got the bottom. We're long one. Our stop is we're going to keep it there. The bottom side of our market profile got filled. Let's take a look at that real fast. There it is. And just to give you a sense of where our positions are and where our trades are, there we are. So at a certain point, we're going to say, all right, we have a stop in, but where's our target? Where do we want to get out? What's the we're long one, ES long one. We're up 25, sim dollars, and I came into the day with minus 1250. I made a bad trade this morning before you guys were here to witness it, but I'm going to admit it. I'm going to fess up. I made the trade. I'm not going to blame anybody else or the cat. So right now, all right, so we're driving back toward, up here, the point of control. Point of control is, 95 and a quarter. Let's take a look at our other indicators here, 95 and a quarter. What's going on? The CCI is kind of now, it's less than 100. It's moving up a little bit. That's a good sign. We're not really crossing anything, but it's less than minus 100. Moving averages aren't really, they're going in parallel right now, so there's not much concern there. So I'm going to rely on the market profile exit and shoot one down here around 95. Okay, if you wanted to be conservative, you would be, one or two ticks below that. So we'll leave it there, and we'll move this out of the way because we're patient. We're not going to pull out our hair and bite our fingers. Now, another strategy, of course, is you could always move your stop here to break even plus a tick. So if you get stopped out, you save, you make your commission back, and everyone's happy. But I think we're good. I'm going to stick to our guns. We're going to hold tight, and hopefully there won't be any crazy tweets that happen in the next 10 or 15 minutes, and that's that. So there we are. And so we're risking 1, 2, 3, 4, 5, 6. Wait, one. I'm sorry. Let's try again. One. Here's where we're filled. 92.50. 1, 2, 3, 4, 5, 6, 7, 8. For 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, well, that's a fair fight, I guess. I don't know. We'll just leave this away. And since we are trading on a 10-minute chart on the market profile view, maybe this will take more than 10 minutes to percolate. Let me get that out of the way. All right. You're welcome, Stuart. Let's see. Lane, shoot out an email to your customer service rep. They'll give you the instructions. It's pretty easy. Yeah, they'll give you the instructions on how to log in from your devices. Paulo says, for me, I'd like to have the charts in seconds too, and the possibility to put a start and end time on. Okay, so two things there. Paulo, yes, I hear you, seconds. That has been something that's asked before, actually. And I'm not smart enough to say, why would anyone want seconds? Because you're smarter than me. But I don't know the answer to that question. It's on the drawing board. Start time, end time is definitely on the drawing board. Hang tight on that. Kurt wants different tick sizes. We could put that on the table also. Carlos, I think we already answered the chart book question. Here they're called views. Yes, you can save these. They're saved server side, and they will show up on any device you log into. Michelle asks, why we be able to keep both sets? I think the answer to that is yes. Volume, adding volume to the ladder. Great question, John. He's asking, how do you add this volume column, to your trading ladder? This is, and because my screen is so small, there's a property button down here at the very bottom. So John, pull up a ladder, hit the property button, and then volume, I've already had it added here. It's in the very first tab, it'll say grid columns, and then available fields. Volume will be here if it's not on your trading ladder. Highlight it and click add, it'll add it. Okay, real simple. Simplify your life. And since I did that, it reset it, so my bad, but that's okay. We'll reset. It'll be okay. Dwayne asks, another great question, Dwayne, thank you for this. Are stops on the server or only on your PC? Stops are on the server. So, well, no, stops are at the exchange. Sorry. Whenever you see anything on the trading ladder, this limit order at 97 and a quarter, this limit order at 94.75, this stop at 90.50, they are at the exchange. I've got a confirmation ID number already back, and this one is telling me, yeah, this is at the exchange. this will not go away unless either you get a fill, in other words, the transaction occurs, or you cancel it, or there's a third way actually. The day ends. The CME is not going to hold these overnight, 4 o'clock. So automatic cancellation at 4. You right-click and cancel it just like that. I'll put it back. Or it gets filled. David, I think the whole world is going web-based. I hear you. I agree with you. Okay, Stretch. I was worried. I wasn't worried. I was excited it was that, but okay. So when I was growing up, my best friend's name was Chris, but his nickname was Weed, but not for the reason you think. It's because every year he grew like 6 inches. The kid ended up being like 6'10", and he kept growing. So he's growing like a weed. So his nickname was Weed. Nothing to do with any substances that you may or may not partake in. But anyway, maybe Stretch is the same reason. Karen, no, these two, no, incompatible. You can't do that. Yeah, okay, so someone's asking for my email address, which is great. I'm going to type it in here. And believe it or not, I personally get trade at InfinityFutures.com. And I'm going to type it in here so you can cut and paste it. Trade at InfinityFutures.com. And I'm going to give you another one that you should consider. I'm not always on here, but I almost always am. inf.jim.cagnina. That's Skype. If you're on Skype, inf.j.cagnina. It's Skype. And then phone number, let me add that too, since we're talking about reaching me. +1 for international folks, 312-373-6220. I'll send that to everybody too. That's how you got to get a hold of me. I'm not giving you my fax number. Nobody faxes me. Okay, that sounds good, Dana. Yeah, feel free to reach out to me on that. So Simon asks, ES or YM market profile, would you look 24 hours, or is it better to see separate sessions? That's a great question. We're in a period right now. Let's go back. So obviously, first thing in the morning when I wake up, I'm going to have this thing on 1700. That's going to be the night before. You got to do some adjusting. So when I wake up this morning, I have it the night before, right? 1700. I want to see what happened last night. I want to see the whole picture last night. And then if you're really particular, you could make it, you know what, I want to make it just the European Open, when Europe opens up. And then you could take, so I have one of these two views pre-market. I'm here early, right? I'm here at 6:30, 6 sometimes, between 6 and 6:30. So I'm here early and I want to see what's happened the night before. So I'm going to look at this and think about it. And I could even name this a different chart book if I wanted to name it a different chart book. But then once the action starts, I switch it over to 8:30 because this really gives me the stuff I like to look at. So if you're trading pre-market, yeah, this doesn't help you because there's nothing here yet. But absolutely, you could toggle around, change them around. Simon, that's a great observation. Stuart, number of ticks are fixed. Howard asks, this is a great question. You ever try 3, 8, 21, 34 EMA? Or is that too much? I think when you do, so my answer is yeah, I've tried everything. I mean, I've tried everything in the kitchen sink. But once you got it, you got it, right? So once you're happy with what you have, you don't want to. The whole premise of today is, analysis paralysis. You know what I mean? It's analysis paralysis. You don't want to have two. You're never going to find something that's perfect, that works all the time, that's 100% aligned to what you want to do. You're not going to find it. You're going to find a couple of things that's going to help tweak your spider sense, because you're going to get that spider sense with experience and help make better trade decisions and better entries. Michelle says CCI and hang on, let's go here. Michael, CCI and MA is heading down. Yeah, moving averages are heading down. They're in parallel for sure. And we have the CCI, about minus 100 now. And again, I'm more interested in the crosses than I am at overbought, oversold. And we've made a decision. I've said, listen, this market profile is going to give me my trade entries and my trade exits right now. And until I see some extenuating circumstance in the CCI or in the candle or in the cross, then I'm going to be patient, because patient is important, more important than anyone can manage. And why long? Because we were breaching, we were getting close to, right? We got long close to where the value area of the price profile approached prices below value. And I know there's only two little bars there, so it's not really a big area to work with. But in this particular case, it's akin to, waiting for the market to try to test new lows and putting your stop below those new lows. And I have it right at the new lows, which is probably a mistake, but that's why I went long there. It's a normal distribution day. We may or may not trade outside of the initial balance. The first two periods. We've seen that happen before, a lot, but we might. And then once that happens, what I'm going to tell you is that point of control, the bias might switch. It might move downward. It might move downward. The whole profile might move downward. So that's another seriously patient way to trade, is wait for that initial balance to be breached, then enter the market as the point of control is going to change. The magnet of the supply and demand, of the fairness of prices is going to change, and hopefully, you're just not, you don't get caught up in a trend day where it's just a one-way ticket to up or down. I mean, you saw it a little bit here on the 19th, where you have this big daily range. But the point of control ended up staying at the initial balance. I mean, at the beginning of the day, the point of control is up here, and then it came back down here, but prices recovered. So that's another thing you got to be careful of, because you don't want to be long here, and then you have all this downside. You're going to get stopped out, but you don't know. You don't know. So anyway, we had a situation where we could buy at the maybe I should have a pointer here. We could buy in an area of, see if I can get a better view. I did too many trades this morning. Sorry, guys. In an area at the bottom of the value area. That's why we did it. And right now, yeah, CCI is hovering around minus 90. It was minus 76 when we made the trade. We still have some parallel lines on the moving averages, and yeah, they're still going down, but we're only on a 10-minute chart, and our time horizon is longer than 10 minutes. We could sit here all day if we wanted, or until something happened. But it's a normal distribution day. There's not a lot of stuff going on, and Fed's next week. And hopefully, do we expect a miracle tweet where Trump, President Trump says, "Hey, I just finished a deal with China"? I don't expect that today. Mueller's going to testify at some point. Is that going to move stuff so much? I don't know. Is there going to be a bombshell there? Who knows? But we have a stop in if there is. So Michael, that was my long-winded reason of why we went long there. And the indicators won't give me enough reason to be scared, and the market profile is looking good. Constantine, you asked the greatest question ever asked. No, it's not the greatest question ever asked, but it's a good question. Are we going to have the dome? This thing, the dome. Let me show you it. Are we going to have this thing integrated into the charts? And the answer is yes. It will be right here. It will be another button you click, and it will be right here side by side with the charts. That is a high priority list item that's being worked on as we speak. Thank you for asking that question. We're so pumped up about that. Absolutely. Now, keep in mind, streaming data is streaming data. And, you want to have the best facility to receive the streaming data and distribute it. Right, so it will be here, and your device will be sensitive to that, but it'll be good. It'll be there. Thank you for that question. So Joe asks, this is a great, this is a great question. So what's my view of Keltner channels and Bollinger Bands? And I'm going to be really nice. My mom said if you can't say anything nice, don't say anything at all. So I always felt that, I don't know. Maybe I'm not smart enough to understand how they work, to be honest with you, Joe. And that's going to be my answer. But I always thought that they, the ranges in the Bollinger Bands, they didn't provide you with any. They didn't provide you with any information that the moving average crosses and the other stuff that doesn't provide you. I mean, our big move here was we saw it everywhere. We saw it in every other indicator. So I have this big cloud over my over my action that runs interference with what I'm looking at. So I don't know, but it's just not my thing, is what I'm going to say. But I'm not a huge fan personally. But if you could find magic in the tea leaves, then you should do it. You should use it. You got prices that are closing above a band. That could be a good buy signal. Same with Keltner, although Keltner I think has a little bit more oomph to it, but it's the same kind of idea. I think I find better information other places. Now something that's my associate young, and I'm going to still call him young, Patrick Zielbauer, even though he's not young anymore. If you say I'm old, which some people say, but younger Patrick Zielbauer, he, the anchored VWAP is something that I'm going to have him do a video on. And where did it go? Anchored VWAP. And you could anchor it at a certain time, whatever it is. Let's just call it 1, 2 o'clock. And you could do some magical types of analysis with that. I'm going to invite him in next time to show this. Anchored VWAP. Oops, I forgot to add the standard deviation to it. So this also gives you some banding type of ideas with standard deviations around a weighted volume weighted average price, it's called. So that's something else. But when you do have this, your moving average crosses are in the way, and you're going to have that analysis paralysis. You have to be careful of it. But there is a science to this, along with some channels, and I'm going to have Patrick show that in the next event, or ask him to. I'll ask him politely, because he's better at that stuff than I am. Ronnie asked trade range highlights. Yeah, so we just did add this new feature called previous open high low close, which accomplishes that. Let me get it shows the previous days open high low close. I mean, that's right now, we're trading in a range here, so you're not going to see it, but the green line has the high on it, yesterday's high. And you can see it paints the lines from the previous day's activity. So I'm not sure if, Ronnie, if that's what you mean by time range highlights, but that's a time range highlight, right? It's showing us what's previously happened and where that high was. Interestingly enough, we're trading right above yesterday's high, right at yesterday's high, which is, I don't know, a good thing. If there's another study called Trend Highlights, I'm not familiar with it. We got Trend Intensity Index. That sounds pretty impressive. I don't know what it is, but you can experiment, but keep it to something that makes a little bit of sense. Moving averages, oscillators, maybe a cloud with some range on it. That's my advice. David, yeah, linked are coming. David, that's an intriguing idea. Adding stuff like point of control, value areas and stuff on the trading ladder itself. That merits a question. That's a great idea. Stretch was a basketball. All right, so there you go. That makes sense. Stretch was a basketball player. Yeah, so was my buddy Wheat. He was awesome. He ended up playing D3 college, I think, up in Ripon College in Wisconsin. But he was a ginormous man. Joe, what do you mean? O-N? Joe asks, could you hold a position overnight or for multiple days? The answer to that is, and I'm going to pull up a website here to help. Hang on a second. Let me get this out of the way. The answer to that is you could hold on to a position for as long as you want. In futures trading, if you're new to futures trading, there's a couple things you have to do, but it's really simple. And I'm just going to go look at a mini S&P 500, for example. Day trade margins with Infinity. Keep in mind, the lower the day trade margins, the riskier the trade. But day trade margins with Infinity futures is $500 per contract for an E-mini S&P. In other words, you have to have $500 in your account, mark to market, to trade one contract, 1,000 to trade two, 1,500 to trade three. Just so you understand the math. But be careful with day trade margins; they're double-edged sword, right? But a majority of our customers trade intraday, which means they're going to enter or liquidate a trade quickly within that trading day. Some folks swing trade. A swing trade might be from 5 a.m. in the morning until the market close. It might be 5 a.m. in the morning until Friday, right? Swing trade. You're trading some swings in the marketplace. Day trade is intraday, of course. And some folks will trade rapidly, in any given minute. And some folks will do what I'm doing right now and just being patient, putting on a position and managing as time goes on. Overnight positions, there is a thing called overnight margins, which is set by the exchanges, not set by us. And right now, the CME Group has a maintenance margin of $6,300 per contract for E-mini S&P. So if you wanted to hold an E-mini S&P over, and that name is kind of E-mini is misleading because one contract at $29.96, one contract at $29.90, what are we at, $29.92, you got to multiply that by 50 to get its notional value. It's a $150,000 contract. It's not small. So if you compare that 6,300 that you need to have in your account versus the notional size of the contract, even overnight margins offers you a high degree of leverage. So be careful with that. But in any event, so that's the only restriction, really. You could hold it overnight. Now, these are 3-month contracts, right? Every 3 months they roll over. So let's say you wanted to hold a contract over for 6 months. Well, you'd buy one now. You'd buy the September contract as an example. And then when December contract materializes at a certain point, there's a thing called rollover where you roll over your position. So if you're long one E-mini September contract, then you're going to sell that contract and simultaneously buy the December contract. So you're still long an E-mini S&P. You're just long in the front month, in the new contract month. That's the only, when I say there's a little bit of work to do, that's the only thing you really need to do if, in fact, you hold a position past rollover. But if you're within a rollover month, you're good. You hold it. Hopefully that helps answer your question. Every contract has a different day trade margin. The micros are a tenth. So instead of 6,800, they're $680 per contract. So that's another great strategy. People are holding micro contracts, and they're the same as this contract, except they're a tenth smaller. The price is the same. Everything's the same. because there's an arbitrage going on to keep the price the same. But maybe you want to do 2 contracts and hold those for a long period of time, and that'll chew up $680 times 2, or $1,360 of overnight margin. So it's more affordable. The micros are a pretty good vehicle for doing that if you don't want the full contract size. Brad, I'm not sure how the CCI works on a 10-minute. I'll look at I'll get the exact equation for you and give you the exact answer. I'm not sure. Stuart has a ticks suggestion. Very good, thank you. So Don would like to use Wilder's moving average. Ability to change moving average type on a MACD. Let's see what we have. Let's go to settings. MACD. All right, and let's look at what we have here for MACD options. Okay, so your request is, I'm writing this request down. This is a good one. Thanks, Don. That's a really good one. Joe, that's coming soon. Tom asks, are orders held at the CBOE or on our computer? So orders are held at the exchange. They're not on your computer. CBO, and so just to give you just to go over what exchanges are what, the CME group owns several different exchanges or brands. They all trade through the same Globex electronic marketplace, but you have the CME group, where which is affiliated with the E-mini S&P, the E-mini NASDAQ, the Russell, Treasury bonds and currencies, interest rates and currencies. You have the CBOT markets, Chicago Board of Trade markets, which is now under the CME umbrella, and those are, there is one stock index, the YM, the mini Dow, and then the I'm sorry, the interest rate products are at the CBOT, not at the CME. Interest rates are at the CBOT, as are the grains. I think I misspoke before. I apologize. Then you got NYMEX and COMEX, which is energies and metals. And those are all under the CME group umbrella. CBOE, Tom, is something completely different. That's the Chicago Board of Options Exchange. Carlos says, I think we need to unwind or rewind our brains to do this. I know. I hear you. I try to unwind my brain every morning when I get in, and that's a great comment though, because I've been doing this. I started the very first time I was introduced to futures trading, and I can't remember the exact year. It was 1980, 81, 82, maybe 1979. I think I was still in high school during my summer. I was my uncle was a trader in the Treasury bond futures pit at the Chicago Board of Trade, which at the time was the biggest pit there was. And he was a local there, which means he traded his own money. He wasn't a broker for one of the big houses like Merrill Lynch or Prudential Base at the time, or one of those guys. And I was, his summer clerk, right? He'd write down his trades, and I would check them with the other guys to make sure that he wrote them down accurately. And then I'd give him his position count. There was no computers, and I'd run those cards to the back office so they could punch them into the system. And so that was one way of doing business, and my brain was wired a certain way. And then as time evolves, we've gone through this whole, the brokerage revolution, where we'd get phone calls. Late 90s, mid 90s. Well, actually, all the way until I don't know, 2001. I was at Infinity then, and people would call in and say, "Hey, Jim, I see a great price profile trade," although we got stopped out, so it wasn't that great. But would you buy one for me at 92 even? And I would say, okay, hang on. I'd call the guy on the floor. Listen, I want you to buy one 92 even. And he'd call me back and say, okay, I got an order working. I was like, great. And then when it gets filled, he'd call me back again and say, hey, Jim, you got, your order was filled at 92 even. And I'd call Carlos back on the phone and say, Carlos, you're filled at 92 even. It's a whole process, right? My brain is wired differently then. Now we just do that. You're done. No phone calls. And then, so then as technology changes, and now we're looking at quotes and stuff on our phones, and we're looking at managing positions on our phones, as you can do here, yeah, it's rewiring time, man. You got to do it. Jeff, thank you for your email. Robert, I got it. 9 minute. Charles, how do you load it? And this is the beauty of this whole thing. You're going to type in your symbol here, ES, whatever, right? It's going to pull up a candle, an ES candle. If it doesn't pull up a candle, it pulls up a line, or so you just change it to candle. And then you're going to add your studies, just like I did. You're going to find them, click on them, and add them. I'm going to take away MACD because I wouldn't add that. You're going to add the CCI, you're going to add the moving average, you're going to add the moving average, and your chart's done. And then you're going to save it. Let's save it as, I don't know, let's save it as CAGS 7/23. That's today's date. I'm done. Tomorrow when I log in, I'm going to go to views. I'm going to click on CAGS 7/23, and it's going to pull whatever stuff I put on here, indicators and studies and oscillators, it's going to show up. Same thing. You want to create a market profile chart, save it however you want. I'm bummed out, though, that we got stopped out. Happens, though. Michael, you're welcome. Susan, I'm glad it was helpful. Stretch, if you're a customer, there's two different ways. If you're a customer, you got to go to your customer portal, log in, and launch these. It's very straightforward. If you're not a customer, just reach out to your customer service rep and say, hey, turn me on for these charts. And then they'll go from there. Either way, it'll happen in less than 5 minutes. Customer portal, if you're a customer, and then you'll see where you could launch them from within your customer portal, and with whatever device you want. OCO trades, I'm not going to go into too much detail here, but I'll give you a simple OCO trade. How to launch an OCO trade from the trading ladder. Hang on, let me find my trading ladder. It's disappeared on me. There it is. I'm going to cancel everything. Cancel all, flatten, get rid of whatever I had going on. So if I were to go, and now we're driving back up toward that point of control. We just had a bad stop then. We're driving back up to that point of control, remember. If I wanted to do a simple bracket, I'm going to go ahead and just select simple bracket. I'm going to set my profit target to 8, stop loss to 8, just randomly. You could set it to whatever you want. And then I'm just going to go ahead and buy one at the market. And it puts an OCO in. Order cancels order, or as we used to say back in the day, order cancels other. And I got a hands-off trade right now. I'm long one. You can see that blue +1 at 93.50. And I have a profit target up. My profit target 8 ticks up at 95.50, and my stop is 8 ticks down, 91.50. And whichever leg of this order gets filled, it will make me flat. In other words, my position will be 0. I will not have a position anymore. I'll either be down money or up money. And at the same time, that other trade, order cancels order, remember, will be canceled. So if this is filled and I'm a loser, that gets canceled automatically. If this gets filled and I'm a loser, this gets canceled automatically. There's a whole bunch of different kinds. I don't know if it was a great video. I take that back. I thought it was a great video on our YouTube channel, which shows you all the different, and actually Patrick Zielbar, I think, does a couple really good ones too. So if you go to the YouTube page, and at the end I'll show you how to get to the YouTube page. There's some really good videos up there on how to do OCOs. But that, in a nutshell, is how you do them. And there's other ones here you could do too: trailing stop, multi-bracket, breakout brackets, whatever you want to do. And remember, cancel all cancels working orders, or you could actually amend this OCO if you want. Cancel all would cancel the orders, the working orders. Flatten will cancel and get you flat at the market. Everything goes away like it didn't happen. Yeah, Susan, to actually add the it's called price pro on this chart. It's called price profile plus. At the very top here, we had kept it at the top because it's new. You click on price profile plus. Okay, click on price profile plus. And then you could change your brick height to whatever you want. Change your start time to whatever you want. Okay. Still a really nice distribution here. I'd do the same trade again, only if it happened, although I'd wait and put my stop a little lower. Ronnie says time range like highlighting over. I gotcha. Yep. Display tab, yeah. Stuart asks, display tab, show me the options. Okay, so display tab, you got candle, open, high, low, close, line, hollow candle, mountain, baseline, volume candle, Hakanashi, hopefully I pronounced that right, line break, Renko, and range bars. Log scale, I don't know what that is. Inverter Y, extended hours, range selector grid. Grid is the only thing I'd ever use here. You could change time zones, that's important, as a lot of our customers are overseas or different countries. Background white or black. And then by clicking on the flag here, you have different language options. So for those of you who are who speak other languages, those are Arabic, French, German, Magyar, which I think is associated with Hungary, of all places, great place. Italian, my favorite, of course. Portuguese, Polish, Spanish, Chinese, and Japanese. And it changes all the menus and everything into the language you like. So that was a display. Hopefully that, I forgot who answered that question. Stuart. Okay. Stuart is here late. Scott, I'm sorry, not Stuart. My bad. Scott, this happens every time, Scott. Not with you every time, with someone every time. They come an hour after. Actually, 11:02 when you got here, I was supposed to be done. Yes, so you are late, but that's okay. I'm not going to scold you. I appreciate you trying, and we're still going. It's 11:17. Scott, I will have this on YouTube later on today. Lactar, thank you. This will be on YouTube later on today. I think I got everything else covered more or less. Stochastics, options, KD, and smoothing settings already on the chalkboard. Line widths, yes. Joe wants to know if Stretch has a sky hook. Dude, if the guy's name was Scott Stretch, he's got a sky hook, among other things. Charles, they're called Price Profile Plus. Charles, Price Profile Plus. TPO, same thing. I'll leave that there for a second. Again, if you have a custom study you want us to add or create, I'd give your customer service rep a call and we will help you. Michelle, I don't speak Italian, although I just did go. I was just in Rome a couple weeks ago. The place is great. Loved it. Oh, it was Russian, not Polish. Simon, you're right. Did I say? My bad. I got to correct myself. Simon, my bad. Russian. Good catch. Sometimes my tongue is faster than my brain. Good catch. Gaelic. Paul says, how important is internet speed? Well, it depends. I know this is going to sound odd, but um, every trader on the planet is going to say, and almost every trader on this planet, is that internet speed matters. You want to know the pricing. You want to know instant pricing as it happens. Um, if I'm position trading or I'm swing trading for long periods of time, tick by tick isn't that important to me because, I'm going to place my trade. Look at that. We're right back to the, right back to right back to the point of control. Right back to the point of control. What did I tell you? I was lucky. Even a blind squirrel will get an acorn every once in a while. So when I'm placing a trade here, I have a bullish bias because the market is in bull mode. I don't care what anyone says, but it is long-term bull mode. We recovered from a big break. We're in a bull market long-term. So again, I'm looking for executing trade below, at the bottom part of the value area, maybe at 92. Maybe if I'm aggressive, I'm going to go higher at 92.5, 93, in the hope that we're establishing, we get back up to point of control. If we get down there, alternatively, if I'm selling up here, around the midpoint, 95.5, then I'm going to do that. I don't need tick data to know where I'm going to get in. Or I don't need tick data to know where I'm going to get out. I got a lot of time. Time's on my side. So speed, accuracy is important, but speed, I'm not day trading here. I'm literally picking my place and I'm becoming patient. So to answer your question it depends on how you're trading. But everybody's going to tell you speed is it. Speed matters. And I generally tell you that too. But your internet connection is important. Stay connected. The plus symbol, what are the plus and other symbols to the right of the studies? Plus symbols. Oh, this just toggles my crosshair. That's all. Toggles my crosshair. Oh, oops, sorry. This will just add some data up here. Open, hello, close data for the bar I'm going over. And then this little drawing tool looks like a pencil. I guess it looks like a pencil. Click on that, and it turns on all of my drawing tools. So all my drawing tools, fib retracements, horizontal lines, regression lines, shapes. If you want to, type words into this thing, vertical lines, all that stuff is with the drawing tool. And, just pick your poison and do whatever you want to do. Let's just do a fib retracement here just for fun. High to low. And it'll just paint it on there. If you want to get rid of it, you could either just right-click to cancel it, right-click to delete it, or if you want to get rid of all your drawings, you just go back over to the left-hand side of the drawing tool menu and hit none. Hit clear drawings, and they go away. That's what that is. This yin and yang opens up the trading window area. And then these buttons up here will help you put a trade in, and it will show up on the actual chart itself. So let's say on the dome itself, 96.50, I want to sell one there. And then if I could find my trading ladder through all of these windows, there you go. So there's my order. And then I right-click if I want to cancel it. It cancels there too. Totally in sync. Hope that helps. I got some other videos in detail on how all that stuff works. Tong asks, I am using AbleSys to predict the market. What is my opinion? Tong, I'll tell you, I've known the folks at AbleSys, Jesse Wang and Jesse's parents and the other folks there for a long period of time, many years. I've known these folks, and I believe that they are, very capable. I believe they're very good. And we have a lot of customers using AbleSys, which is fine. So that's my opinion of it, and hopefully it's working out for you. I've never personally traded with their system, but we have a lot of customers that do. AbleSys, for those of you who are interested. Joe, that's on the chalkboard. David, I think I did a whole, there should be a video. If not, I should probably do a video. Profile plus, what's the difference from blue shaded areas to gray shaded areas? Yeah, that's the whole. Let me check the YouTube channel to make sure there's a video on it. That's the whole, there's a whole presentation I could do on how this works, what the importance of the gray shaded periods are, what the importance of the blues are. You know, so in the gray, just in a nutshell, the gray shaded periods, it represents roughly one standard deviation worth of price action. But let me just see what I have on the YouTube channel for you, because we're in a triple overtime here, and again, let me move all these windows out of the way and pull this over. So to get to our YouTube channel, and this could help a lot also, scroll all the way to the bottom. You'll get this little tiny YouTube icon. Go to infinityfutures.com, scroll to the bottom and get the icon, or just go to YouTube and type in Infinity Futures, and you're going to get our YouTube channel here. We have a Watch Me First video, which is an introduction to the new charts. And then we have a channel, a playlist, New InfinityAT Charts, which gives you some how-to videos. They're short little videos. They're not real long, on how to do different things. And I add to that every week, right? Then we have a tip of the week, which is done by younger Marcus Zielbauer, a very capable guy here at Infinity. And we do one of these a week, also a tip of the week. Using the trading ladder is up here. It's also very, very useful videos. They're all relatively short. And then getting started with AT charts. Do I have a market a price profile plus up here? I don't think I do. So I'm going to make one, and I'm going to add it up here. And David, it's something I use every single day. I think it's great. So I'll go ahead and get that going for you. We'll get a video up here. Maybe I'll do a whole webinar on it. I don't know. That'll be fun too. I've done some webinars in the past. Let's just go to videos here just to make sure one more time I don't have it up there. I don't. Okay, I'm going to do it. It's on the list. I'll do it this week. And I'll email everybody when it's ready to go. Michael, yes, you are exactly on target. CCI is getting ready to cross. Rob's still in the battle. He wants to do some more trades. It's 11:27. It's 12:30 in New York. I am going to let you guys go. I really appreciate you spending this. We were in overtime today. We went to overtime today. I appreciate you being here with me. We had a big group of people. We want to make your experience as good as it could possibly be. Remember, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Hard to do. Patience is key. Anything I can do to help, reach out to me directly. I'd be happy to, or your customer service rep. Arguably, they're considerably smarter than I am. But in any event, have a great day out there. Be good.